Both the euro and the pound continued to decline against the US dollar. On Monday, bulls made an attempt to win back losses from Friday, but failed to succeed. The decline was natural given the weak macroeconomic data in the Eurozone and the UK. The services PMI in the Eurozone came in lower than expected in August as the reading was revised downwards in almost all major countries. A value below 50 indicates a contraction in economic activity in both the services and manufacturing sectors. This resulted in a broad sell-off in the euro. As for the UK, business activity in the services sector was a bit better than the forecast, but still remained below 50, which raises concerns about the economic health of the country. The UK composite PMI was also below 50. Against this backdrop, the British pound fell sharply and retested recent lows. After that, the demand for the pound sterling strengthened again. In the course of the session, it formed several good entry points into short positions and moved by 25-30 pips. However, the bear market is still in place. Let's have a look at today's economic calendar. In Germany, factory orders are projected to have fallen sharply in July, which is another indication of economic contraction. UK's contraction PMI for August is expected to decline and stand at 49.8. An important indicator to watch is retail sales in the Eurozone. Their reading is forecasted to drop by 1.2% for the year and by 0.1% month-on-month. On the one hand, a decline in retail sales could cap inflation, yet the ECB is unlikely to change its decision at the upcoming meeting in mid-September based on this indicator. In the afternoon, traders will take notice of the trade balance data in the US and the ISM non-manufacturing business activity, which is expected to rise to 52.5. If the data exceeds expectations, the US dollar will appreciate against both the euro and the pound. In the UK, the MPC Treasury Committee of the Bank of England will hold a meeting. The comments by the officials about the monetary policy may support the British pound and put its decline on hold. Now let's move on to the technical analysis of the euro-American dollar pair. On the 1-hour chart, the euro experienced a deep fall of more than 90 pips. At the moment, bulls are trying to regain ground and push the price back to the nearest resistance at 1.0748, where moving averages are located. A false breakout at this level will give a signal to open short positions. Actually, a false breakout should result in a rapid decline in the price. If this does not happen, it would be better to postpone selling the pair until the quote hits 1.0772. I will try to go short after a bounce from the level of 1.0798, considering a move of 25-30 pips. In case the price continues to follow the downtrend, a bullish activity at 1.07 and the MACD divergence will create a nice signal for buying the pair. This will also confirm that large market players have entered the market and will pave the way to 1.0748 and 1.0772. If bulls are idle at 1.0709, I will go long only when the quote reaches the level of 1.0669, as it is not the best idea to trade against the trend. As for the British pound American dollar pair, the situation is similar. A false breakout at 1.2585 will serve as a sell signal with a downward target at 1.2529. A further decline will open the way for 1.2488 and even 1.2444, where long positions can be opened on a rebound. It is possible to go long at 1.2488 and 1.2529 only after a false breakout. If bulls assert their strength at 1.2585, consolidation at this range and its downward retest will create a good entry point into buy positions. If so, the stop-loss order set by bears may be triggered, and the price may surge to 1.2626 or even 1.2670, where I will be selling the pair after a bounce, considering a correction of 30-35 pips. Short positions at 1.2626 and 1.2585 can be placed only after a false breakout. Good luck.